Jane Street is one of the most powerful trading firms on Wall Street. On February 24th, Terraform Labs bankruptcy estate filed a lawsuit against Jane Street in a federal court in New York. The complaint accuses Jane Street of insider trading, fraud, and market manipulation connected to the collapse of TerraUSD, also known as UST. 2 months ago, in December 2025, social media revived a theory that Jane Street was responsible for a so-called 10 a.m. Bitcoin dump. Jane Street is one of the most powerful trading firms on Wall Street. It doesn't run a crypto exchange, it doesn't issue tokens, and most retail investors have never interacted with it directly. But its name keeps appearing around some of crypto's biggest collapses. And now, for the first time, it's facing a direct lawsuit tied to one of the largest failures in crypto history, the collapse of TerraUSD. Here's what's happening and why it matters. On February 24th, Terraform Labs bankruptcy estate filed a lawsuit against Jane Street in a federal court in New York. The complaint accuses Jane Street of insider trading, fraud, and market manipulation connected to the collapse of TerraUSD, also known as UST. UST was an algorithmic stablecoin. That means it relied on code and market incentives instead of physical reserves to maintain its peg. UST worked alongside another token called Luna. Through what was called a mint-burn mechanism, users could swap $1 worth of Luna for 1 UST and vice versa. The idea was that traders would arbitrage price differences and keep UST stable. In 2022, that system failed catastrophically. UST lost its $1 peg and eventually it collapsed entirely. Roughly $40 billion in market value was wiped out across UST and Luna. Now, nearly 4 years later, Terraform's plan administrator is suing Jane Street, arguing that the firm had advanced knowledge of a key liquidity move and traded on that information. Let's break down the specific allegation. According to the complaint filed in the Southern District of New York, on May 7th of 2022, Terraform quietly withdrew 150 million UST from a Curve liquidity pool. This was not publicly announced at the time. A liquidity pool is essentially a shared pot of funds that helps traders swap tokens smoothly without big price swings. Removing liquidity can make a system more fragile. The complaint states that less than 10 minutes later, Jane Street executed its largest single trade of UST, selling 85 million UST in one transaction, specifically into that same Curve pool. Terraform alleges that this was not a coincidence. They argued Jane Street had access to material non-public information about the liquidity withdrawal and used it to exit its position before the broader market realized what was happening. In traditional finance, insider trading means trading based on important information that the public does not yet have. The lawsuit claims that Jane Street used confidential communications, allegedly obtained through former Terraform connections, to gain an advantage. The complaint goes further, alleging that the firm leveraged relationships with Terraform insiders and acted within hours before the ecosystem entered what it describes as a death spiral. Jane Street denies the allegations and says it will defend itself in court. And this is important. These are allegations. No court has ruled on the claims yet. So why is this significant beyond just one lawsuit? Because Jane Street is not a small crypto fund. It's one of the largest quantitative trading firms in the world. According to the complaint, the firm generated over $20 billion in net trading revenue in 2024 and more than $24 billion in the first 3 quarters of 2025. Jane Street operates as a market maker. A market maker continuously buys and sells assets to provide liquidity. Think of it as the plumbing of financial markets. Without market makers, trades would be slower and more volatile. Because of that role, Jane Street interacts with many crypto companies and exchanges. That proximity to large flows and liquidity pools means its trades are often visible on-chain. And that visibility has led to repeated speculation. 2 months ago, in December 2025, social media revived a theory that Jane Street was responsible for a so-called 10 a.m. Bitcoin dump. The theory claimed Bitcoin often dropped around US stock market open and that ETF market makers were intentionally pushing prices down. But when BeInCrypto analyzed the data at the time, the evidence didn't support manipulation. Bitcoin did not sharply crash exactly at 10 a.m. Futures open interest remained stable. More than $430 million in crypto liquidations occurred, mostly from leveraged long positions. In simple terms, traders who borrowed money to bet on price increases were forced to sell when the price dipped. There was no clear evidence of coordinated institutional shorting. That episode showed how easily large firms can become narrative targets during volatility. The difference now is this is not social media speculation. This is a formal federal lawsuit alleging insider trading under securities laws and, alternatively, under commodity laws if crypto is not classified as a security. The legal stakes are substantial. The complaint argues that UST and Luna qualify as investment contracts under U.S. securities laws, meaning that they fall under the Howey test. The Howey test is a legal rule that decides if something counts as a security. It asks whether people invest money in a shared project and expect to earn profits from the work of others running it. If the court agrees with that classification, insider trading laws would clearly apply. If the court does not classify them as securities, the complaint argues they should be treated as commodities under the Commodity Exchange Act. Either way, Terraform is attempting to bring Jane Street under federal anti-manipulation statute. There's also another key detail. The lawsuit alleges that Jane Street sold 85 million UST into the curve pool immediately after liquidity was removed, and that this was the largest single swap in that pool, allegedly triggering further selling pressure. From Terraform's perspective, that trade accelerated the collapse. From a market maker's perspective, it could be interpreted as risk management during a destabilizing event. That distinction between aggressive trading and unlawful insider activity is exactly what the court will have to determine. The broader question is about market structure. Crypto markets operate differently from traditional equity markets. Much of the activity happens on public blockchains. Wallet addresses are visible, transactions are timestamped, but the identity behind those wallets is not public. Information can move through private Telegram chats, OTC desks, and informal relationships. The Terraform complaint alleges exactly that kind of informal information flow. If proven, the case could redefine how insider trading is interpreted in decentralized markets. If not proven, it may reinforce that visibility of trades does not equal manipulation. For now, the facts are clear. Terraform's bankruptcy estate is seeking damages, disgorgement of profits, and other remedies. Jane Street denies wrongdoing, and no court has yet made a determination. What makes this case especially important is timing. Crypto markets are becoming more integrated with traditional finance. ETF participation has grown. Institutional liquidity providers play a larger role than they did in 2022. If courts decide that crypto tokens fall squarely under securities law in this context, compliance standards for market makers could tighten significantly. If they do not, regulatory gaps may become more apparent. Either way, this lawsuit is not just about what happened 4 years ago. It is about how the legal system treats information asymmetry in decentralized markets going forward. Jane Street has been close to multiple major crypto events: FTX through former employees, ETF trading during Bitcoin volatility, and now directly in the Terra collapse through this lawsuit. Proximity does not equal guilt, but proximity plus allegation equals scrutiny. And for the first time, that scrutiny is happening in federal court.